Good evening, all. This is Shay Horowitz, ShogunTrading.com. This is our weekly newsletter. I want to talk a little bit about the market, the way it behaved last week. We had a series of speeches, we had a series of economic events that came out, and they took all the confidence out of the market. Economy is all about confidence. If you ask me to borrow $20, I let you borrow $20. If you ask me for $100, well, maybe I need to know you. If you ask me for $1,000, I need to have confidence in you. If you ask me for $100,000, well, then I need to have a lot of confidence in you. And that's exactly what the economy is about, and that's exactly why banks are not lending. That's exactly why people are shrinking, and so on. People are shrinking their own personal economies right now. Everyone is. I don't care how wealthy you are. You're shrinking your personal economy. You stop spending as much because you keep hearing that things are going to get worse. You keep hearing that things are not going to be as good for a while. Now, we are passing these humongous stimulus bills, humongous spending bills, but they are not instilling any confidence in the market. There's 1,100 pages to the stimulus package, and no one read the stimulus package. There's not a single person that knows what's exactly what's in it. And they did not address the housing market, of course, which is the main thing. Now, what we have is a continuing of economic slowdown and continuing of individuals, of consumers shrinking because they're not sure what's going to happen next. They don't have the confidence. Geithner came out and did not install confidence in Wall Street or in anyone else, and that's pretty bad. Now, what that causes is a general slowdown. We have a serious fear right now of our automakers filing for bankruptcy. We have a serious fear right now of the banks, of financial institutions being nationalized. If they keep going, if they don't get the actual help that they need, they're going to get nationalized, and that's pretty scary. That's what's going on in Europe right now. And that's why I'm saying it. It's not a thing I invented. It's what's going on in Europe. So when they nationalize anything, they wipe out the equity. They wipe out stockholders, and that's scaring people. So there's two ways to look at this for you as an investor, as a trader. There's two ways to you can crawl up and hide under the bed and wait for things to be over. You can shrink your own personal economy like everyone else is, or you can do something about it. What I mean by doing something about it is you have the power to use your liquid assets, which are basically stocks and ETFs and so on, to take advantage of such trends. Let me give you the most obvious example. USO is a United States oil fund, for example. It mimics the oil. And when oil was going up, if you were to buy this one, you would make a ton of money while oil was going up. We called a short over here. We called a reversal over here. And then you would take this as oil is falling down. You're using your stock investment, you're using your stock trading in order to capitalize on market trends. And now you can do the same thing also with the banks and the economy in general. I'll give you another example. Here is the home builders. And let me get the weekly chart. Weekly chart on it. And what we did is we went short on it a few times. All these were our shorts when we able to capitalize on the real estate market coming down. This is a hedge. This is just another way. If you can't sell your house, you can short the housing stocks, and you do pretty well. Okay, so what's practical for right now? What are we doing right now? Well, these are the home builders, and you can see we're sitting right above 10. And if we below 10, the housing stocks, the home builders are going to be in trouble. So that's something that you can go short on, or you can buy puts on. What's interesting to me right now is the XLF. XLF is the financial spiders, and the financial spiders looks pretty scary if you look at how far they've come down, and they're still coming down, and who knows where the bottom is? The bottom is going to be zero. That's always going to be support, but you want to be able to go short. Now, shorting the XLF may be difficult for you, so here's a couple options. You have the SKF. SKF is a financial, it's an ultra short ETF. It's very expensive and it's very volatile, so you want to be careful over here, okay? And if the financials start diving and you buy this one, it can move quite quickly. It's very much leveraged, so please be careful with this one. The other one that I really like is, of course, is FAZ. This one is excellent as well. 52.49, for example, 52.50. You can go up to 87 in no time, and that's a tremendous amount of profit on the financials taking a dive. Again, you have a choice. You can hide from it and contract, or you can take advantage of it by going short on the financials as they dive. You hedge yourself, and you actually are making money, which is good. That's a good thing. USO, I really thought that energy prices were going to go back up last week, but this economic slowdown is not helping anyone. I really thought that Geithner will come out aggressively, rescue housing, rescue the confidence, instill confidence in people, motivate people to go out and relive their life. And it was exactly the opposite. Geithner came out and said, I have a plan. It's a great plan. I don't know what the plan is. I don't know what the details of the plan yet. I can't get into the details of the plan, but we have a plan. We're not going to address housing, but it's very complicated, so I can't give you details. And Wall Street just absolutely went nuts. So anyway, so the oil fund itself also looks pretty good for the short side. If we're going to have a downturn, this is what you want to look at. I want to show you the S&P 500 real quick. I want to show you what happened last week. Let's do a 30-minute basis. And I want to show you what happened when we came around the 800. Timothy Geithner came out and spoke, and that's when we took a dive over here. And then we came back up again, and we took a dive again. And we were right at the 800. Now, 800 is a major support on the S&P 500. And, of course, they came out with a news announcement a half hour before the market closed. And they said, we are looking to solve the mortgage crisis. And we don't have exact plans on how we're going to do it yet, but we are looking to solve it. And the market was just looking for that kind of news. The market wanted that kind of news so much that it went straight up. That's what it wanted. Now, we're waiting for that kind of news. And it should come out this week, and I hope it comes out this week because that's what the market needs. Now, they're going to sign the stimulus package on Tuesday. The automakers are going to come to Washington and come up with some kind of a plan also Tuesday. And we're hoping to hear something about the housing plan. Now, if the housing plan disappoints, if the stimulus package disappoints, then break the 800, and we have quite a ways to go. This is the bottom over here, 741 on the S&P 500, right here. Right here. If we break 800 and we break this, we're going down. And that's definitely something that you want to be aware of. That's something that you want to take advantage of. Again, if you want to take advantage of the market coming down, spiders are great. You can go short the spiders below 80, or you can go, is it SSO? No, I'm sorry, it's SDS. SDS is basically the ultra short side of the S&P 500. Anyway, I wish that they will instill confidence, and I wish the market will not come down, and I wish that the economy will flourish, and I wish the confidence will come back and everything along those lines. I really do. But if the market does not, our job for our own individual economies is to hedge ourselves and protect ourselves from all the goofballs that are making these decisions and actually profit from it. Hope this helps you out. Please don't hide in the closet. Come out and protect yourself and be aggressive about it. Have a great night, and I will talk to you next week. Take care.